Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, again, we establish our trend by simply joining, in this case it's an uptrend, by joining these troughs, and that trend just sort of gives us a little bit of a longer-term perspective as to which way the market is going. And of course, when we're looking to lock in our profits or sort of reestablish a directional bias, we need to be aware that, of course, a downtrend is going to make lower highs and lower lows. So if we've been trading in a specific direction, and then all of a sudden we recognize that the market makes an attempt but then does not break that previous high and then in fact breaks that previous low, we've now established a downtrend. And too many people fail to recognize that as being an important signal. And I think, guys, if we look back in the overall the overall direction that the market has gone over the last year, and you apply this approach even on a bigger time frame, you'll see that it's very easy to establish a trend line over the last five years, and it's very easy to see once that trend line was broken, that key sort of pivot or that low support level was broke, we then ushered in the next leg or the leg of the bear market. And so it's not about being right, but what it's about is actually being in a position to make an educated decision as to whether or not it's appropriate to stay in a particular position. So, of course, again, we reinforce the idea that we want to watch for that pivot point break or that peak or trough break to determine our directional bias. So let's look at a chart on the CDD to determine our directional bias. So let's look at a chart on the CDD here, which is the U.S. versus the Canadian dollar. Now, this is yesterday's chart, so as you can see here, we were trading in and around the 120. So just to kind of establish a little bit of a benchmark as to where we're at right now, we had a little bit of a push today up towards the 122. In fact, the CDD closed at 122.43 today. Now, to sort of reinforce the whole idea of identifying a trend, I'm just going to take the information that we see here over the last couple of months, and as you can see, we've established quite a solid resistance level that anybody that's been following our pair value outlooks will attest as it's been on our radar for quite some time. And of course, you'll see where we rallied into it and we rejected. We then rallied into it again and rejected, and rallied in and rejected. And what that did was it reinforced the probability of a move to the downside, simply because the uptrend that we were in was not continuing to break those highs. If you're somebody that had been long over that time frame, the CDD or the U.S. versus the Canadian dollar, that tells you that, hey, you know what, it might be time to start locking in some profits or putting a plan of attack together in order to ensure that you're not separated from any profits that you've had. Now, that doesn't mean that the possibility for a continuation is there, but what that means is that there's a high probability that there's going to be a pullback. So if you'll notice, as of late, what's happened is we've now entered into a very sort of intermediate term downtrend on the CDD. That doesn't necessarily mean that the potential for a continuation to the upside is in place. What that means is that we are in a downtrend, and we have to be aware of that when we're creating our directional bias. Now, in saying that, what we've done is we've simply looked at that key point there, and we've looked at the second point, and what we've done is we've drawn that trend line based on those key points, and we've said as long as we remain below that trend line, or as long as we remain below that pivot point, then we can be comfortable and confident that we are in the continuation of a downtrend. Now, in saying that, what we've recognized here is down at that 118 level, roughly that 117 to 119, is that we're starting to establish a little bit of a support. So the idea that this downtrend is going to continue, the clues here are suggesting to us that, well, in order for that downtrend to continue, yes, we may be making lower lows as we established here, or sorry, lower highs, but the lows are starting to find some support at a key level. You'll notice that we played into this support, we rallied, we then broke down below, and now we've rallied, and now we're starting to establish a little bit of a basing, a little bit of a base in at that level. That's not to say that we're not going to see a continuation, but what it's telling us is that we have to be aware of the possibility that we may be consolidating for another push higher. Okay, so and again, what we would look as is a break above your key level in this area here, and perhaps a test of this 123, 124. In fact, we're at 122 and a half right now. We can take short-term plays or a short-term directional bias, to the upside in this case based on that information, but we always have to be aware that this key level in here is a bit of a stumbling block or a resistance level for any continuation. If we were to buy some calls, for example, as we see support coming in at 118, we have to recognize that an important target or resistance level is in here at the 124. So it's not about jumping in and just thinking that you're going to sort of ride it all the way to to 130, 140 on the CDD. It's about creating some benchmarks along the way and making sure that you're establishing targets, locking in your profits, because nothing moves in a straight line. Now, of course, in saying that, a break below that level there is going to sort of reinforce that whole concept that we need to see lower highs and lower lows and open the window for a test of a key support down in here at the 114 established by this sort of consolidation zone here and then this pivot point there. Now, Steve, again, feel free to jump in and clarify or add as we move forward. I see there's some questions lining up there, and I'm not sure whether you're answering them, just by typing them in. But if you have anything to add, here's a chance to kind of do so.
Yeah, I guess Belinda has a question about where you would draw that trend line. Do you draw it from the wick, from the body? What do you?
Yeah, ultimately, what we look at is the closing. So although the wick, in the case we're using a candlestick reference, is a very important clue as to just the decisiveness of the market, I'm really using I'm using my trend line and I'm basing it on the close. Sorry, not the close, but in this case of the bearish candles, it would be the openings of the day, but that hard and fast number. Now, keep in mind that, and this is the one thing everybody needs to understand, is that the markets are not absolute. In the sense that, you'll notice that when I drew my support in here, I didn't have a razor's edge line in there and said, if it comes to 118.72, this is where we're making our decision. We have to be aware that there's key zones or key levels in the market. You may establish your target at a specific level, but the market doesn't know that, and it's going to trade into these areas but not necessarily be specific. So when I draw the trend line in there, it's really meant as a benchmark, in terms of just establishing that directional bias, again, using a trend line, but I wouldn't be using the wick. I would be using the hard and fast, in this case of our bearish candles, the hard and fast open, and then look for a close above that decisive point in terms, if I'm using the trend line as an entry point, which I wouldn't be necessarily, but I'd be looking at the close.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.